Today is Wednesday, February the 24th, and you can see the McClellan oscillator did something I didn't quite expect, going back towards the neutral line. And the, let's just go back to the home page. The advancers tripled decliners. If we look at what was hot today, Apple wasn't. The rest of technology was. The financial sector certainly was. Facebook wasn't. Amazon wasn't. Home Depot had a bad day. Utilities were down. Industrials were up. So generally, it was an overall good day for the market. It was certainly a snapback from what we've seen on Monday and Tuesday. The SPX broke out of this downward channel here, broke down first, and now it's moved back up over 39.09, which where we'd set the alarm. On a daily basis, the S&P is heading back towards its high of 39.50, and I think we can expect it to get there. It's the stimulus bill, the COVID-19 bill, which is going to pass through the, I think it did pass through the House. It still has to go through the Senate, but also Bernie Sanders said that he is going to make sure that a big $2 trillion infrastructure bill goes through. And that would explain why we saw Caterpillar do this and Deere do that. Apple, on the other hand, finished the day, in this hammer up here. So it recovered all of its losses in the day. It didn't quite, a hammer would be where it finished the day off at a high, but it did pull back a little bit, but it's over 78.6. That's a good sign for Apple. Square had a really rotten day, and that was due to earnings, but it was all over the place. It started off down considerably. The range was $19 over the day, and that's basically where it was by 10 o'clock, down $19, went up, down, flat, and then tailed off a little bit and found its support on S1. But if we look at it now on a daily basis, we had a bounce off the bottom of the cloud, pretty darn close. So that's a good sign. I did buy more Square today at $2.42. NIO up $2.75. Let's look at it on a daily basis, and we're back into the cloud. Plug back into the cloud. Big up day. QS still has not penetrated into this this gap. It's below the 50 simple moving average, above the 50 extended moving average. Its RSI is starting to decline. Nonetheless, it did have a green candle RSI bar. It is a stock that's worth looking at. I wouldn't do it until it breaks 67.07. So not going to spend too much time today. I just think that the S&P now had this really nice little, that's a very small Fibonacci. Really, the key thing is that we are looking to going back to previous all-time closing highs, which would be that point right there, and we did touch it. You can see that the previous all-time closing high was right back here on February the 17th and February the 12th, and we touched it today and just pulled back. But that's a good sign. The odds are that tomorrow is going to be another good day and an upside. So keep rolling your short calls. Don't lower the strike price on your short calls as the price gets further away from the original strike. Like if you sold 275 Square calls, rolling them to next week is only going to give you about 50 cents. Rolling them out to March, on the other hand, gives you $3.89. And that's what I did March 19th. I also rolled my 260s out to March 19th for $6.67. And I opened up a 250 short call, which would expire next week, for $6.20. Rolled all my NIO and plug and set for another week. But I am not lowering the strike prices of my short calls.